what if I told you I can show you a strategy right now that you can follow step by step in order to get payouts past prop firms? I've used this strategy myself to pass prop firms and get payouts. I've showed it to other people that's also managed to get payouts. It's a very simple strategy. Even a 5-year-old can trade this. Step by step, mechanical, very little room for discretion. So what we're going to be trading is the 5-minute orb, the 5-minute opening range out. You will be doing everything on the 5-minute. So it's the 5-minute time frame. That's the time frame you're using for the opening range. That's the time frame you're trading on. Everything is done on one time frame. You're going to be taking one trade a day. That's it. If you wait after 11 a.m. and you do not find a trade, then that's a no trade day. So we are only trading from 9:30 a.m. EST to 11 o'clock a.m. EST. That's our trading window. You will be trading the Dow Jones or the US 30 if you're on Forex. If you're trading futures, it will be the YM. So you can trade this on Forex, on futures. We'll be trading on the Dow Jones. So one time frame, one trade a day, one session, one instrument. That's all you need to do. Okay, so now let me show you the strategy. So the strategy is called the 5-minute orb. So what it is, it's very simple. Every day you come to the chart, you wait for the 9:30 a.m. candle to finish printing. So at 9:30, that's when the market opens. You wait for the first 5-minute. We're doing everything on the 5 minutes. You wait for the first 5-minute candle to finish printing. Once it's finished printing, you mark out the high, so the top wick of that candle, and you mark out the low of that candle. So maybe let me just take all of this out of here to not confuse you. So this is the 9:30 candle. Once it's finished printing, you mark the high, so the top wick, to the low of the candle, the bottom wick. That is our range. That is what we're trading for. Now, all we're waiting for is a candle to open and close outside of this range, either to the upside or to the downside. So we're waiting for a candle to open and close outside of the range. So when the market opens, you might get the very next candle. This candle opens and closes inside the range. We don't do anything, we wait. Next candle, same thing, opens and closes inside the range. Even if this candle was to close outside here like that, we do not do anything. Why? Because it opened inside. What we want to see is this, the candle to open and close outside the range. So let me just give it a wick. There will be wicks on the candle. So even if it wicked back inside, it doesn't matter as long as it opened and closed outside the range. This is the candle we're going to enter on. So if it opens and closes outside the range to the long side, we are going to enter for a long. Now the only rule with this candle is that if it's above the range, if we're looking for buys, it has to be a bullish candle. If it's below the range and we're looking for sells, it has to be a bearish candle. Buys, it has to be a bullish candle, a green candle. Sells, it has to be a bearish candle, a red candle. If this was to be a red candle, we do not enter it. So say for example, if this was to happen, something like this. It opened and closed outside the range, but however, it is what? a bearish candle. It's a red candle. We do not enter. We ignore that candle. We wait for a bullish candle. We wait for a bullish candle to enter for longs. So now, how do we enter? As soon as the candle closes, we enter. We place our stop loss below the low of that candle, so below the wick, and our take profit is for a 1-to-1. So when as soon as this candle closes, we will enter here. We'll put our stop loss here below the wick, and we will aim for a 1-to-1. That's it. That's how simple it is. That's all you have to do. I'm telling you, you do this, you stay consistent, you will get results. Now, let's do bearish example. So you come, you mark out the opening range. It doesn't matter what color this candle is. It doesn't matter if it's that sort of candle. It doesn't matter if it's a bearish candle, if it's a bluish candle. All we care about is mark the high and the low of the first 5-minute candle. And then we wait for a break. So on this bearish example, this candle opened and closed outside, and it's a bearish candle. It opened and closed outside. It's a bearish candle. We're looking for shorts, so we enter on the close of that candle. Our stop loss above the wick, a take profit 1-to-1, and that's it. It's that simple. Now this average is about 4-5% a month. Now that might not sound like a lot, but I'm telling you, to be trading prop firms, and if you can get 4-5% a month, you will be making good money. The aim is to stack prop firms, not to try and get unrealistic targets like 10, 15, 20% a month. That's very unrealistic. 4% a month is realistic, it's doable. You're trading one instrument, one trade a day, one session. It's very, very achievable. I've done it, other people have done it. So now I'm going to backtest this. We're going to backtest just to show you how it works in real time, okay? Okay, so now let's do some backtesting to show you the strategy in real time. So I'm going to be backtesting here on a 100K account. If you're trading futures, it's YM. The Dow Jones is YM. If you're trading CFD indices, it's the US 30. For the date, I'm just going to choose the most recent full month. So we're in July, so I'm going to go back to June. So let me do from the 31st of May all the way to the 1st of July. So that will give us the whole of June, which is the most recent full month, and we just backtest that month and see what we get. So like I said, this strategy averages about 4% a month. Some months you might get a bit more, some months you might get slightly less, but on average, that's what it will get. And that is very good for a strategy to consistently get 4% a month. It's actually very good. All these things you see online about 15, 20% a month, that's not realistic. You might get some months like that, but that is very, very rare. The key to prop firms, if you're trading prop firms, is to stack as many accounts as possible. So for example, if you've got a 100K account and you're getting 4% on that, that's 4K a month. If you now got 200K account and you're getting 4% on that, that's 8K a month. So most of the people that's making money off prop firms, that's what they do. They stack accounts. They've got millions in funding, and all they do, guys, is 2 to 3% a month. That's it, 2-3% a month, and you're laughing. So forget this trying to aim for unrealistic targets. Like anything around 4% a month is good, it's achievable, and you stack accounts, you're going to be making serious money. Okay, so now let's get started with the back test. So I'm going to go to the next day open, which is the 1st of July, right? Okay, so now what we want to do is go to the 9:30 candles. So This is the 9:30 candle. So now we will mark the high and the low of that candle, and that will be our range. So that's the high and low of the candle. So now what we do, we wait for price to either break up, open and close to the upside, or open and close to the downside, and we will enter off that candle. So let's see what happens. Okay, so now you see, now we've got a bullish candle that's open and closed above the range. So we can enter off this candle. If it broke down below, we will be looking for a bearish candle that opens and closes below the range. Another thing as well, another tip, this is like the perfect candle. If you see, it's like a full body candle. It doesn't really have any long wicks either side of it. That is the type of candle we want to enter on. If this candle was printed here, something like this, I would never enter on this candle. Why? It's a rejection candle. Basically, price had opened here, it traded all the way up here, and it's come all the way back down and it's closed here. So what that tells me, the momentum is shifting to the downside. The bears are in control, they're pushing the market back down. So I'm not going to enter on a wick like that. You see the candle's closed, so you see the very next candle, it's a bearish candle. What you want is these sorts of candles, bullish, you see, full body candles, no long wicks, and this as well. So that's the type of candles you want to see, okay? All right, so now we enter for a long, so we enter on the close of the candle, stop loss below the wick of the candle. So right there. And then we just aim for a 1-to-1. That's it. All we're doing is trading 1-to-1. Place the order and we let the trade play out. Perfect. You see that? So that was a winning trade. So now I'm just going to trade through the month and we'll see the results at the end. Okay. Okay. So today is a no trade day. So remember what I said, our trading, we only trade from 9:30 to 11 a.m. So from 9:30 all the way to 11, price hasn't broken out of this range. So today's a no trading day. And a no trading day is good. It's better than taking a losing trade or forcing a trade. No trade, you save your capital, you move on to the next day. So yeah, so this is the results of the back test. So total P&L 6,000 on the 100k account. That's a 6%. So I told you average is about 4%. Some months you get a bit more, some months you get a bit less. Win rate 71%. So if you're trading 1-to-1 with a strategy with an edge, a win rate anything from 65 to 70% is very common. It's very realistic. So we only took 14 trades for the month, 10 winners, 4 losses, and we made 6%. Come on, there's not an easier way to trade. So here's just the winning and the losses. So yeah, so that's the strategy. So like I told you, it's very simple. The only thing you need to pay attention to is the candle bodies. So when you're trading, you basically want full body candles. You want to avoid dojis. You want to avoid candles with long wicks. When you have those, it's better to wait for a full body candle and enter on those candles. So if you like the video, if you like the channel, subscribe. I will be dropping more gems, and I'll catch you on the other side.